Hey guys, welcome to the channel. My name is Victor, and I wanted to create this video because I believe that there's a lot that I can add to the YouTube space, especially when it comes to finance and stocks and stuff like that, right? And I love investing. I love learning about companies. I've been doing this for over 10 years with pretty good returns. And I wanted to create this video because I believe there's a lot of misinformation. I believe there's a lot of fear out there, right? And I want to create this video talking about the easiest way to invest, right? And this video is more for beginners, but I will talk about my strategy, how I invest in these four ETFs. And in my opinion, um, these are the only ETFs. If you're a beginner and you're not interested in really learning about the market, these ETFs pretty much will have you set. And I believe that everybody should be invested in these ETFs or use some type of strategy to invest in these ETFs, right? So the first one I want to talk about is the SPY. The SPY basically represents 500 of the best companies in the stock market. When you think about assets under management, just think about that as the market cap. The total of, the total shares, the price, right? Shares outstanding. And this is what I really want to talk to you guys about is since the inception, right? The SPY came out roughly around in the early 90s. And since they came out, they're up 2,700%. And every time there's been an opportunity, a dip, or crash, it's been seen as a buying opportunity. And on top of that, they're giving you a $7 dividends, right? But what we should be looking at is not the short-term falls. We should look at the long term. The long term. We should be investors for the long term. And the reason why we should be investors for the long term is because of the compounding capabilities, right? And how powerful compounding is. When we talk about the SPY, when you look at the SPY in a 3-year return, right? You're averaging 22% year over year in the last 3 years. And we've had a fantastic 3 years, right? Imagine investing your money and you're up 60%. Don't even think about how much. If it's $1 million, 100,000, 1,000, you're up 60%, right? 60% is impressive in 3 years. Just investing in the SPY, no matter if you're investing at all-time highs, at the bottom, just buy, right? You would be up roughly 60%, right? You would be basically up there with, in the last 3 years, with one of the great, with the greatest investors of all time. Averaging 20% in the last 3 years is impressive, right? When you look at it at the 5 years, when we look at the SPY in the 5 years, it's roughly around 13%. 13% is still really good. 13% is outstanding, right? Where can you put your money in? And in 5 years, they could give you 13%. There's not many places I know. So if anybody do know, please put it in the comment section. Let's talk about it. Let's spread that knowledge because that's why I created this channel, is because I want to spread that knowledge. And then when you look at the 10 years, right? 15% year over year growth. In 10 years, your account doubles, right? And that's the goal of investing. We're going to look to double our account, right? We're long-term investors, right? So we're not thinking too much of the short term. However, 15%, for 10 years, it's incredible. That's, like I said, you will be considered one of the greatest investors, right? Right? The SPY is, like I said, it represents 500 of the best companies, and these are the different sectors. So, I believe as a beginner, you should invest in the SPY. And at that same time, while you're investing in the SPY, participating in the market, participating in the growth, not missing out on the growth. You could take that time while your account is growing to learn more about fundamentals, how to value a company, do case studies. Why did this company fail and this one succeed? As investors, we try to take the shortcut and use technicals and all that stuff when there's a better way to value a company. And that's why I want to make my videos more about educating retail investors on how to look through the fundamentals of a company, how to research a company, and make a intelligent buy, come up with a thesis, and buy a company based off of a long-term thesis. The best thing about the SPY is even though you have 500 of the best stocks, it is weighted by market cap. So bigger the market cap, more influence that individual stock will have on the SPY. So your Nvidias, your Microsoft, your Alphabet, your Meta, Alphabet being Google, Apple, Amazon, Broadcom. So you buy in just one share of this, you have a little bit of all the best companies in the world, right? So that's why I would recommend. Well, sorry, I don't want to recommend anything, but that's why I believe that everybody should be having some type of strategy to participate in the market because look at this 15% year over year in the last 10 years, a dividend yield of, sorry, not dividend yield, but dividends of $7.38 roughly. And since the inception, they're up almost 3,000%. Come on, right? Come on. Now, one that I really like, that I invest in a lot, is the Qs. The reason I like to invest in the Qs is because of the volatility. And with more volatility comes more opportunity for growth, right? The Qs, since they, came out in the late 90s, they're up 13%, right? 13%. Sorry, not 13%, 1,300%. But what I like about it is in the last 3 years, if you was invested in the Qs, man, you would be up almost 90% roughly, right? In 3 years to double your account, you are one of the greatest investors of all time. I'm telling you guys, like, we have to look at investing as the long term, not short term. Short term is when the opportunities present itself, and long term is when we will, you know, execute. We're gonna grow our accounts long term. When you look at it in the last 5 years, they've grown 15%. And then when you look at the last 10 years, right, because we've had an incredible market, right, in the last few years, they're averaging around 20%. So in 10 years, you would have doubled your account twice, right? That's something only the greatest investors do. And you could do that while you are learning, you could be investing in something like this, right? And the reason why they're a little bit more volatile, right? So they're going to give you a smaller dividends because a lot of the companies that they have, they're tech companies and they're growing pretty fast. And a lot of the companies when they're growing a lot, they're sometimes not going to pay dividends because they're reinvesting all of the extra cash to continue the acceleration of the company. But we'll talk about that type of stuff in future videos, right? The top holdings are going to be very similar to the SPY. You're going to have your Nvidia, Microsoft, Tesla, Alpha. You're going to have all those great companies, right? If you don't like volatility, right? The Dow, this is the stock for you. This is the ETF for you. If you do not like volatility, these are your blue chip stocks. These are your Visa. These are your Home Depot. These companies are basically handpicked because they represent basically the core of the US economy in a way, right? You're gonna have your top holdings, your Caterpillar, your Visa, McDonald's. These companies, if you study them in a certain type of way, could tell you a lot about what's going on in the economy, right? So it's really good. This is like I said, you're not gonna get that much volatility because let's say, for example, the SPY could be down potentially, let's say 9%, the Qs will be down 11%, and the Dow will be down maybe 4 or 5%. Same thing, if you're not getting that volatility, you're not going to get that crazy growth. But it all depends on your risk tolerance. And like I said, we'll make future videos talking about different type of risk tolerance and what you could be doing. When you look at the performance, they're still giving you over 10%, right? And anything over 10% year over year is good. Don't let other people fool you and tell you that 10%, making 10% on your money year over year isn't good. Don't let them fool you, right? Because you could put your money in your saving account and you'll get less than a percent, year over year. Or if you put it in a high yield saving account, it is extremely safe. But in a high yield savings account, you might not even be beating inflation. You might just be right there with inflation. So your money's you're not really, not really doing much. And you could see like technology is 18%. So that kind of tell you like when you're more in technology, you'll be you'll definitely be more in the volatility because if you look at the Qs, 50% roughly, um, 50% of that is roughly technology. And like I said, that's why they could be considered to be a little bit more volatile when you see the SPY only has 30%. And this right here, this one right here, the IWM is more for risky. If you have a high appetite of risk, this is the one for you because this is where this is represents the Russell 2000, and this is gonna be all your small caps. These are gonna be a lot of the companies that have a lot of debt. Don't their revenue is not quite there yet, but they're very popular or they're up and coming stocks, and you'll see the performance is pretty decent. In the 5 years, you're looking at three, but still 10 years, if you was invested, you doubled your account. And that's the point. The point of investing is to grow our money. But I would recommend this. Well, sorry, not recommend. But I would always say people should, if you have a high appetite of risk and you want to get into, the Bloom Energy, the INQs, right? That maybe, they're the value that the market is giving doesn't really make sense, but you still want to have, a basket of good stocks that gonna give you year over year growth. This will be pretty good. The IWM is pretty good. And the way I use these ETFs, right, is the way I like to use these ETFs is I like to rotate my money through these ETFs, right? Because if you pull them up, right, if you pull up the chart, and I might make a video about that. If you pull up the chart for the SPY, the Q, the Dow, and the IWM, they're pretty much they move in sync. Like if one's at all time highs, the other one is pretty much at all time highs. If they're all down, pretty much all of them could be down. So what I did was during the tariff, I was invested in the Qs, not as much as I want to, um, because they were down 25%. Man, I wish I was. I invested, but I didn't invest how I wanted to. But I did invest how I wanted to in the IWM because IWM at that time was down around 15, 16%. And I was able to invest very heavily because they were at all time highs. And my theory was, after looking at them for 20 years, looking at the chart for 20 years, they pretty much move in sync. And, I was, they would benefit from cutting of interest rates. And we all know that we were going to cut interest rates at that time. And they benefit, very hugely from any type of interest rate catalyst. So I was able to invest and I made 20% on that, and that was pretty cool to make. And there's a bunch of different ETFs that you could do the same thing, rotate your money through because they pretty much move in sync. And like I said, we'll make more videos about it. And I just wanted to make this video like the easiest way to invest because um a lot of people out there are fearful. And to be honest, don't be fearful. Be grateful. This is an opportunity, right? You have great companies that are trading at extremely low valuations. And this is the time that you're going to be like, man, you're going to look back 5 years from now and be like, man, I wish I could have got that stock at that price, right? And I'm going to try to come out with, as much videos as I can weekly for you guys to help with that process, to educate you. But, you know, you're not going to lose if you study these stocks. And if you just buy, you're not going to lose. But like I said, I'm not recommending anything. I want you guys to do the research. I want to help you guys do the research. And I want us to grow our accounts together. Thank you for coming to the channel. Thank you for staying. Please like, subscribe. If there's anything else I could do, any ideas, or is there anything I could do to make the video better, I'm open for suggestions. I'm new to the YouTube game and I really want to, you know, be able to grow a community with you guys. Like I said again, thank you for coming. You guys have a good one.